Yeah. So I just want to give you an update on the market in New York City and how it's going, both on the sales and on the rental side. It is sort of a tough market to understand, really, even for people such as myself, that this is literally all I do. And I see different segments of the market. I work in different neighborhoods, different boroughs. Like, I have a really good view of pricing across different boroughs. And it is a little tough because what we find is, there's still a lot of demand for townhouses in Park Slope and, the prime parts of Brooklyn, but there's also good demand for farther out in places like Crown Heights and like Prospect Lefferts Gardens. But when you are close in and you're on the low end of things, if you are in Boerum Hill or Brooklyn Heights and you're like in the sub-$1 million category, it's actually very slow for a lot of people, a lot of listings. Listings are staying on the market longer time. We're seeing price drops where we weren't seeing price drops earlier in the year. And that's true of Manhattan and Brooklyn and Queens. However, the segment of the market in terms of like, are you in the high end or are you in the low end of the market, really matters too, because the rates that the Fed has been raising directly affect lending, and the lower ends of the market are more dependent upon financing and thus the rates than they are at the high end. So you add to the increasing rates, which are sort of put a downward pressure on the market, but then we still have low inventory, which puts an upward pressure on the market. And now, when you add to that, not only on the relatively low inventory still on the sales side of things, we have very low inventory on the rental side of things still. And the rental market is still pretty hot, although not as hot as it was a few months ago. But what some people are realizing is that the rental market is crazy, particularly on the entry level of the sales side of things. In some cases, it actually might make more sense to buy a place. And because you could own a place if you have the cash for the down payment. You can own a place that is, has the same expense to you as renting would, or cheaper in some instances, depending on the size of the place. So I just had somebody, we were looking at, there are places, studios in Sunnyside in Queens that were like, $350,000 or $300,000 studios, like studios and stuff. Like, that's a very, like, even at 5% rate on your mortgage, that's still a very affordable, it's like $2,500 a month or something like that. There's a lot of competing pressures in the market. Overall, if you need to want a generalization, which is sort of hard to do, but like overall, things are slowing for sure. Okay. Different segments of the market are slowing at different paces, but everything is slowing. However, my expectation is that you're going to see prices peak in the third quarter. And the reason that prices are going to peak in the third quarter is because the reporting of closings, right? So the pricing that we pay attention to is the closed prices. In New York City, there's always a 2 to 3 month delay between when things go into contract and when they close. Thus, the reporting that you're getting 2 or 3 months down the line, basically a quarter later, reflects the previous quarter. So I think that things peaked in the second quarter of this year of 2022, and you're going to see that reflected in the closing prices in 2023. Hopefully that makes sense. I think that the market has already peaked, generally speaking, and that we, and there's a lot of statistics to back this up, and that things are staying on the market longer and prices are headed in a downward direction. Even though there's still relatively low inventory and still like a crazy rental market that pushes some people towards buying. Okay. I think this is going to continue. This downward trend, though, is going to continue to the end of the year. It feels like you're going to start to see real buying opportunities in the last quarter of this year and in the first quarter of next year. And everything really depends on how the recession goes. If the recession, if there's the soft landing, or if we have a more serious recession, that's going to have a much bigger effect on the end of this 2022 and into 2023. It's hard to predict that, but if I were to guess, I would say fourth quarter from 2022 to, through the second quarter of 2023 feels like that might be a prime time to buy. but this is I'm trying to predict the future, which is not always easy. So anyway, that's my thoughts on things now. If you are a seller and you're waiting for the market to get better, don't do that. Get it on the market now. If you're a landlord and wondering whether you're thinking about renting a place, or like you should rent it like immediately too, and get it hooked in. It'll like get people signed in for as long of a lease as you can do it. If you are a buyer or a renter, if you're a renter, it's still a tough market. There's still multiple offers. You still got to go over, ask. I'm happy to give advice to renters, even if you don't want to work with me. and I know you and your friend, especially, I'm happy to help. And if you're a buyer, I don't know that you need to be in a rush. There are starting to be some deals on the market, but it's not fully a buyer's market yet. We're really still transitioning. So there you have it. All right. Talk to you later.